The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Friday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time. We got about 24 minutes to go until the start of trading, and we got markets in positive territory to kick things off. S&Ps right now, you're up by about 17 points, or about 0.3%. We put it back on a 5-minute chart. You see the acceleration almost right from the closing bell last night. We're trading at 6,057. You drive up to 6,085. A little bit of selling in the last few minutes or so, last half hour or so, I should say, from about 8:30. Nonetheless, positive territory. NASDAQ 100 up 0.7%. You see the gap away to the open at 6 p.m. We trade higher and we dip a little bit, but NASDAQ 100 up 0.7%. You get the Dow basically flat right now, and the Russell negative by 2. Bitcoin holding well above 100,000 right now. 101,000, we'll call it. Crude back above $70. We're almost at 71 early this morning. We're trading at $70.26, up by a quarter. Gold continuing to pull back. Quite the pullback in gold. You're talking about $80 from where we were. What is that? Wednesday night? Yeah, $80 from where we were Wednesday night. We're trading at 26.81. Quite the slide yesterday. Now we have some dollar action today, but no real huge action. Let's jump to yields first. Okay, you jump over to the 10-year. We have lower price, higher yield. You have the 10-year now at 4.35. 4.35. You take a look at this daily, quite a reversal. All right, looks like we may be heading back to the lows we had on November 18th when we were approaching about 4.5% on the 10-year. So what do we have? We got lower price. We have higher yield. You jump over to the dollar index right now. Now, what is interesting is, right, the dollar is right back to where we were yesterday morning, folks. Compare that to where we were on yields, right? Look at where we were yesterday at about 110.16. So you have about the 10-year about 10 ticks lower. The dollar does break above 107 in the overnight session to almost 107.20. We've pulled back a bit, but on a longer-term basis, what are we doing? Well, we're pushing the highs in the dollar. We're pushing higher yields in the 10-year, and that's causing some stress in gold, with gold pulling back to 26.80. Now, we'll see where we go. We have a Federal Reserve meeting in 5 days from right now. And with that in mind, let's talk a little bit of yield curve to kick things off. So, a key treasury spread is, as they put it, in this one, then usually the inverted curve that we got a lot of talk about was the 2 and the 10, right? Was inverted for a long time, not inverted anymore. Let's pull up the entire yield curve right now to see where we are. Real quickly, taking a look. So right now you have the 2-year yield at 4.2 and you have the 10-year at 4.35. Those were inverted for the longest time, right? When the Fed was hiking dramatically, when they were at a very high rate, the 2 was higher than the 10. That's not the case anymore. But you know what is? What was the case was the 3-month was always higher. But guess what? That's finally changed. Look at that. Now this is the yield curve and the difference between the 10-year and the 3-month treasury. And the reason why is because the Fed's probably going to cut interest rates in 5 days. And what's that going to do? Well, that's going to bring down a 3-month interest rate, and that's going to have the 3-month interest rate, okay, be at about 4.3, and we have the 10-year sitting right now at 4.35. So they disinvert. You can see inverted for some time, but that's not always how it had been, right? Usually you have the 10-year well above where you are in a 3-month. That is not the case right now. But nonetheless, we still have a bigger yield on the 10-year than we're talking about on the 3-year right now. And yeah, as they put it, the spread is a proxy for how investors see Fed policy affecting economic activity. Yeah. And it became inverted for 13 months. And it was a recession threat, but that did not pan out, as we all know now, right? All right, we stay with the Fed. 5 days out from a meeting. Hey, we got 12 days until Christmas, folks. 12 days until Christmas, right? We've been talking about this one. Why not? Economists say it. The market says it. They're all in agreement. Let's pull up the odds in terms of what we're talking about for a cut right now, because it's all but guaranteed, basically, that they are going to cut in the meeting 5 days from right now. We bring over in terms of what the market is pricing in for a probability. Yeah, it's been quite a slide, as in there's now a 3.6% chance that they stay. That was a 0.1% chance. Remember I told you percentages on small numbers can be deceiving? That was a 0.1% chance. Like, man, look how fast things move, too. You go back a week, it wasn't even close. That was a 0.1% chance, I think, on Monday, maybe? Nonetheless, it's a 3.6% chance. It's an outlier. They're going to cut by 25 basis points. Anything could happen, but that's how the market is pricing it right now. And that's how everyone's seeing it. But the more important conversation, the more interesting conversation is what happens when you go out, right? What happens when you go out? As in, okay, we're going to be at 4.25% in 5 days. Where are we going to be at in June then? 4 meetings after that. Maybe 4.25%. Maybe you get one cut in the next 4 meetings after that. They are on pause, okay? Forecasters expect 3 rate cuts next year. That's what they say in here. Now, what's the market think? Well, let's go out to December. I just told you we're going to be at 4.25% right now. The market's only pricing in 2 cuts right now next year. If you say, what's the highest probability of where the market is pricing? We will end 2 cuts next year. They have 8 meetings next year, folks. 8, right? Yeah, 8 meetings a year is what they have. And you're looking at about 2 cuts priced in. And there's a real chance, almost a 25% chance you get 1 cut. Now, you know that these numbers are going to change, okay? But it's important to know where it is priced right now so that as they do change, you know it's factored into the market pricing right now and how that may change. So, yeah, it is a deal where you're talking about cut once more and then slowing the pace dramatically is how the market is pricing it right now. And this is what they're looking at, right? We're at 4. 3 rate reductions is what they're looking for. Now, they're using the upper bound. I've been using the lower bound when I'm talking here, okay? So when they cut in December, they're going to be cutting to 4.5%. And then they're looking that maybe you get 1, 2, 3 cuts to bring it down to 3.75%. Market's saying maybe 2, okay? But either way, they're going to be on a little bit of a pause, and we'll see where we go. Yeah, and you talk about risk to inflation and risk to employment. Yeah. From the September survey to the December survey, quite the difference in terms of where they are, right? In terms of whether there's a balance or whether there's a risk to inflation to the upside. Yeah, that's a big number, man. So they got to be careful about cutting, to put it lightly, right? All right, what else are we going to talk to kick things off? Yeah, we could talk some insurance. Boy, let's talk a little bank regulators. We'll tease this one when we come back. We're going to check out the banks. Eliminating the FDIC. Boy, everything's in play with Trump coming in and Trump 2.0. Folks, remember what happened in the 2008 financial crisis, okay? Banks are going to be just fine, no matter what. A little bit of regulation goes a long way in the health of the economy. But nonetheless, yeah, you're talking about potentially. We'll talk about it when we get back. Good old Doge. We'll see what happens. Stay tuned, folks. We're coming back after the bell. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, charts and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Welcome back, folks. Markets in positive territory. I say that, but S&P's up by about 0.25%. NASDAQ 100 up by 144 points. That's about 0.6%. Dow and Russell barely in the red right now. So jumping back, let's take a look at some of these banks real quick as we jump around. You get JP Morgan right now. They're going to be up by about $1. You put it on a 15-minute. They pull back with the market a bit. A relentless rally for all these banks lately, up to 254. You're sitting at 251. All right, you jump over to Bank of America this morning. Slightly in the positive as well. You jump over to Citi, trading at 71.60. All of them through the roof, man. The runs that these companies have had. You jump over to Wells Fargo, up to 78. You're back to 70 this morning. So, yeah, the story comes out, right? You're talking about eliminating the FDIC and bringing it under the Treasury Department, potentially. Okay, they're not going to eliminate FDIC insurance. But it gives a bit of pause. Okay, and what they even talk about in here is that even the banks, okay, have a love-hate relationship, but they're not going to want everything to get thrown into the mix. And the one thing that I'll say coming off on this is that, do you remember when the whole Silicon Valley Bank started, right? When that whole collapse started, if you recall, are my charts looking rough? Not sure what's going on. I got a full connection here. Hopefully we kick it in. I'm going to make sure I'm connected here for you, Al. Yeah, I am. I'm connecting my best. Let me know if we need to reset it or what's going on. But if you recall, it was literally the day that you had Powell testifying in front of Congress, and you had members of both parties talking to Chairman Powell about how the regulations imposed on some banks that were smaller hurt them in light of the heavy regulations that small banks were facing that might be better suited for only the larger banks. It was literally as some of those smaller banks were about to cascade and almost cause a second financial crisis. It was within like 24 hours, the day of. You had politicians in Congress telling Chairman Powell that they hear from their constituents, they hear from, local regional banks, that regulations are too tough. It's always going to be the case, folks, okay? The one thing that we need is regulation on banks, okay? And we need some regulations. We do. And yeah, they're out of control. And hopefully things get done here in terms of getting a little bit of lean and mean, right? But boy, when you talk about taking the FDIC, putting it in the Treasury Department, it was just last year that we had bank failures all over the place. So, all right, and we move to the next one. Now, you want to jump into it, you want less regulation, this is what may come with it. And I don't understand how this makes sense, man. It makes sense for one man, that's for sure, Elon Musk. Trump transition team wants to scrap crash reporting requirement that Tesla doesn't like. I mean, you can't make this stuff up, right? And this is where, folks, it is going to take trust. We've been talking about this, okay? It's going to take trust to jump into these self-driving vehicles. You can't hide the reality. The roads are very dangerous. This is the one to get your head around, because I try it. Tens of thousands of people die on the roads every year. Tragic. No matter how great self-driving cars are, there's still going to be humans driving on the road as well. All right, it's not going to be an instantaneous overnight shift. So you're going to have self-driving cars and you're going to have humans. Well, humans are going to be able to cause accidents with self-driving cars, even if it's not their fault. And unfortunately, there's going to be bad stories out there. And with the way the internet is these days, right, the truth is going to lie somewhere in between. But there's going to be horror stories that come out with self-driving vehicles. And you're going to have to trust those vehicles to get into it. And when you get into it, if you hear that they're passing regulations that they don't have to report crashes anymore, it's going to take a lot to trust what is coming out and jump in those vehicles, even if they're safer, And the recommendation is to kill the crash reporting rule. From a transition team tasked with producing a 100-day strategy for automated policy. And yeah, they cannot determine if Musk had any role in there. You think Musk had a role in that? You think he had a play in that? Yeah. National Highway Traffic Safety Administration shows Tesla accounted for 40 out of 45 fatal crashes reported through October 15th. 40 out of 45 is Tesla. And they have a bunch. They got a bunch. And we've all heard the stories in terms of an autopilot engaged. And folks, you're driving around in a Tesla. The autopilots don't work yet. Okay, they call it autopilot. It's not autopilot. It's assisted driving. But, doing away with the regulations isn't going to build the trust that you're going to need. Because it's going to begin with an option, right? It's going to begin with an option. As in, Uber has already started talking about deals with Waymo. This has been quite a pullback for Uber. Look at this thing, from 87 to 61. My goodness, in the span of a month and a half, 2 months. Wow. And you're breaking below that channel now, too. You better watch out. This is quite a little pullback we got going on in Uber. You're coming right back into the highs we had in 2021, just like that. But Uber has already teamed up with Waymo. They'll start offering rides in 2025 in certain markets, but they're going to give you the option to hail a driver or to hail a self-driving car at a more affordable price. Guess what? Until you're comfortable, you're not going to be. Are you going to be the first person hailing automated drivers? The future's coming. It's just when you start doing away with regulation and crash reporting, I'm not sure that's what's going to get it done in this arena, because it's going to take a lot of trust. Because unfortunately, there's going to be bad stories out there. And if you have bad stories of people getting hurt and you combine it with they don't even have to report crashes anymore, it's really going to be tough to get the acceleration versus something that is apparent, that you can see through, right, that you trust, a transparency that would allow consumers to trust, because there's no transparency in not reporting any crashes anymore. That's going to cause hesitation in that market. But guess what? Tesla don't mind. You're pushing all-time highs yesterday. Not pushing, making. 429 for Tesla shares yesterday. And you think about it, folks. What did Elon spend? $250 million, right? It sounds astounding. It's basically nothing when you talk about how much wealth he has. And it's almost nothing when you think about, for that type of regulation, to do away with crash reporting for self-driving cars running a company like Tesla. Now, you make the case that's the best thing for the country and the best thing for consumers and the best thing for businesses. Let's hear it. I don't know how that one plays out. Because what they talk about is unnecessary data. I mean, it's straight out of PR here, okay? What do they say here? Excessive data collection. Excessive data collection. Is that really the real? You really think that it's excessive data collection to make sure that as we're pushing out AI that we have reports of crashes? Do you remember what the roads used to look like and seatbelts and stuff like that, folks? I mean, they show you the clips when they first passed drunk driving laws. You ever see the clips of people sitting in their vehicles saying, come on, man, can't I have a couple beers on the way home? Right? What's going on with these over-regulations? Yeah, certain regulations are needed, folks, okay? And reporting crashes of self-driving cars, probably data that's going to be important going forward. So be on the lookout, and don't think that's just going to help those vehicles. That's the point. Don't think that's just going to help Tesla by hiding what happens, because it's going to come out in those stories. We need transparency for consumers to trust. All right, we're coming back for the opening bell. NASDAQ 100 up 133. We'll be right back, folks.
The consistency you're looking for is closer than you think. One or two adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the second and fourth Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry October 11th and 25th for more live trading action. Your purchase goes towards 2 sessions, so make sure to sign up now so you don't miss a chance to sit next to Larry as he trades the market live. For all information and to reserve your spot today, go to the front page of TFNN.com. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got markets open. You got an S&P right now up by 15 points. NASDAQ 100 making new all-time highs yet again today. 21,812 right now, up 160 points. Dow barely in the green, back above 44,000. And we got the Russell negative by 6 right now. We jump back to yields, the dollar and gold. You got the 10-year continuing to drop right now. Yeah, we got the 10-year yield above 4.3. I think we're sitting at about 4.32 right now. Where are we? 4.35, excuse me, 4.35. That's right. On that 10-year, you jump over the dollar as we got higher yield coming at you. Yeah, dollar strength, man. 106.90. You know, we had a lot of central bank action yesterday. If you were watching the program yesterday, excuse me, we had European Central Bank. They cut. They brought their rate down to 3%. We had the Swiss bank cutting by a surprise 50 basis points versus 25. That brings their rate down to 0.50%, and they plan to keep going. I was saying, one of my best friends in Switzerland looking at a house right now, and they got mortgages at under 1%. Remarkable. But nonetheless, so that is the competition. As in, what is the competition for the dollar worldwide? The competition for the dollar worldwide is the euro is on a cutting path, and they're already at 3%. One of the currencies that people flock to at a time of uncertainty is the Swiss franc. Well, what are they doing? They're trying to protect themselves in their currency to make sure everybody doesn't come into that currency. And what are they doing? They're lowering interest rates in a dramatic fashion to make it unattractive. It's remarkable when you think about the impetus and the influence that those currencies and all across the globe are going to have when you talk about giving the dollar a bid. As we push 107 yet again, we got the 10-year approaching 3.5%, excuse me, approaching 4.5%. We're at 4.35% right now. And yeah, that's a tough one to gold right now, with gold down another $29. You know, you put it on a longer term chart. Maybe we're coming back into this low that we had on November 25th. That brought us all the way down to 26.24. You have this low out here from November 14th at about 25.50. We were just trading at 2,300, almost July 1st, right? So volatility across the board right now, but gold struggling. And keep your eye on that dollar, man. Because no matter what happens to yields in here in the U.S., right? Remember where the rest of the world is right now. Remember what happened yesterday. The Fed's supposed to bring our overnight lending rate down to 4.25% to 4.5%. I know I keep harping on it, but compare that to the rest of the world. Look at the strength in the dollar, and what's going to change? Well, we'll see. What could change is, what if there's weakness, right? That is kind of the variable, for lack of a better term. Excuse me. What if there's weakness? Well, if there's weakness, guess what? Then what might have to happen is the Fed might need to cut, right? They might need to bring things down from a 4 handle in their overnight lending rate, and that would cause a little bit of a reprieve, to put it lightly. But we'll see if that happens. I was looking for one more article I pulled up here. All right, one more. So I was looking for talking about the dollar companies. One more check, because they're sending signals. I like this article. I was reading it this morning early, talking about the dollar. Where are we? Come on. No? All right, I'll find it at the next break. Yeah, I'll have to. All right, let's jump over to some of those dollar. Yeah, they're sending warning signals, all right. Look at these charts, right? Dollar Tree. You remember when they were jacking prices up during inflation? Right? Look at these ones. Look at these ones. That's a weekly. My goodness. Yeah, you're trading at $70. We jump around to some of the retailers. Walmart's not having problems, man. Walmart, slightly in the red this morning, down about 0.1%, trading at $94, we'll call it. Trades up to an all-time high of 96 yesterday. You jump over to Target shares. Target, different story for sure. Down about 35 pennies right now. You jump over to Macy's. Macy's shares having a volatile week, but you're higher today. Yeah, you get a little bit of a lift after their tough earnings, but you clawed it back on Wednesday. Macy's up a 2% number so far this morning. You jump over to Kohl's. Kohl's shares down another percentage to $13.92. I tell you, we went to Target and we went to Kohl's yesterday. My mom was dropping off. I was out with my mom. She was returning something at Kohl's. She was not happy. There was lines everywhere. They sent her to the wrong place. She originally wanted to pick up the item in the store, and they told her they didn't have it. She went back online, ordered it online, and it said to be available within 2 hours at the store. So they technically had the item in the store. It was a total mess, for lack of a better term. And so she's telling me all this stuff that happened in Kohl's. I wasn't there, right? She's saying, I feel like I never want to go back to that store. Literally what she said, right? I said, man. I told her about the chart. I said, yeah, well, their chart's saying they're in trouble, and maybe they are in trouble. Down another percentage point for Kohl's coming into the holiday season. Yeah, and the pain is just not ending. They gap away on the last one, and you're at $14 right now. You compare that to a company like TJ Maxx. quite a different story. They're flat today, but they've been a rocket ship. Whether you talk about Marshalls, you talk about TJX. Yeah. All right, let's see what other stories we got pulled up in terms of equities that are moving right now. Yeah, how about this story? Buy now, pay later. Stay away from it if you can, folks. A $4 billion loan deal from private credit 6th Street is up there. Yeah, how about it? Capital upfront for a firm to underwrite short-term installment loans between a 4 to 6 month time frame. $4 billion over 3 years is what they're talking about. Once paid back, the capital rolls back into the pot to make more loans. So what do they got? They got a $4 billion revolving credit line. $20 billion that could be extended over a 3-year partnership when you think about the role that they have going on, right? If they're doing $4 billion every 4 to 6 months and they have that deal going on for 3 years, this could allow them the ability to make $20 billion worth of loans. And their symbol is AFRM. And they are up 5% today. You take a look at this on a longer term basis, down to $8 from $116. My goodness, and you're back living it up at $72, almost up by 4.4% on that revolving credit line. I call it revolving. It's $4 billion, and they got it for 3 years, and they only make loans for 4 to 6 months. Yeah, not exactly indicative of a strong economy when you got buy now, pay later, right? Equities accelerating higher, as this market is accelerating higher as well. NASDAQ 100 up 190 points right now. Let's check in on some of the FANG, I always call them FANG stocks. It's the Magnificent Seven. We'll call them the Mag 7. Apple shares. We make an all-time high a couple days ago. We're basically sitting at all-time highs right now, though. You close at this level, and you're going to close at an all-time high on Apple. And you're talking about a company now. What are we pushing, man? What are we pushing? Are we going to hit $4 trillion soon? We sure are if we're on this path. $3.77 trillion is the number for Apple right now. $3.77 trillion. Amazon shares pushing all-time highs in the green barely. We jump over to Meta shares. 630.85 right now. You jump over to Microsoft, barely in the green by 0.1% right now. Google having quite a week on their quantum computing. And Google basically flat at 193.47. We check in on Tesla. Sitting right near all-time highs at about 416 right now. Some of the other companies, Salesforce, yeah, this thing's been on a run, man. Up by another 1.3% right now for Salesforce as we get the NASDAQ 100 at all-time highs. 21,834 right now. We check back in on gold coming into that break. Gold continuing to drop, man. Down by $32 or 1.2%. Stay tuned, folks. We'll come back. We'll take a look at some other equities that are moving this morning. We'll talk Restoration Hardware, accelerating higher. We'll be right back.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got Restoration Hardware. And look at this thing, right? A pandemic darling on the high side. 744. The market recalibrates to 200. We chop around for almost 2 years, and you're surging higher, up by 16% right now. Excuse me. As they hike their forward guidance, they see fourth quarter revenue growth up almost 20% from a year ago. Acceleration of demand is what they're talking about there. And yeah, you talk about it. We put it back on a daily, and it has been quite a run. From about 6 months ago, you were sitting at 212. You double that, up 100% from where we were in June, pushing 443, and quite the extension from where we were just a month ago at 315, right? Remarkable. Restoration Hardware. And it does appear as if there's at least, to put it mildly, certain sectors in this economy of haves and have-nots. Right? Yeah, we jump around to some other equities with movement. We jump around. Norwegian. Yeah, they were higher. They give it up. They were higher in the pre-market when I was looking at them. 27.75. They trade a little bit lower. They got an upgrade to overweight from Barclays. You jump over to Penn. They got an upgrade as well, I think. Talking about some upgrades. Yeah, and they give it up a little bit, but still up by about 5%. They get an upgrade from JP Morgan to overweight. Let's see what else we got. Yeah, we talked about Salesforce trading higher, Tesla, Restoration. Yeah. How about Broadcom? AVGO. Look at this thing, man. How about it? All right, let's talk a little Broadcom right now. So, massive opportunity in AI. Well, we know that one exists, but nonetheless, they deliver, man. AI revenue increased 220% for the year to $12.2 billion. Always nice when you have big percentage numbers on big real dollar numbers. You talk about it, man. Earnings, $1.42. Revenue, a slight miss, but nonetheless, they're excited about the future, man. Soaring demand from AI infrastructure, and there you go, 220% is what their AI revenue jumped. Opportunity over the next 3 years in AI. Massive specific hyperscalers have begun their retrospective journeys to develop their own custom AI. Yeah. And Broadcom's currently developing AI chips with 3 very large customers. 1 million AI chips in networked clusters by 2027 out there. AI networking could between 60 and 90 billion by 2027 is what they're talking about. Boy, infrastructure software division, almost $6 billion in revenue, nearly tripling the $2 billion that it was at. Includes a boost. Yeah, they bought VMware, which was completed a year ago, but nonetheless, man, you got Broadcom accelerating higher, up 22%. We take a look at a longer-term chart. Look at this thing, man. From $45 2 years ago to $220. And it's a gap away. And it's a gap away from this area that you had been consolidating in for almost 6 months, right? You gap higher 6 months ago. You delivered on the earnings 3 months ago as well. And boom, this is the breakaway, man. Up to 220 for Broadcom this morning. We jump over to NVIDIA shares this morning. Up by 0.8%, pushing 138. You jump over to Intel. Intel catches a bid yesterday. You accelerate higher. I think their CEO was talking about everything on the table. You could even talk about breaking it up. I think I saw that headline somewhere yesterday as Intel traded up almost 5% to $20.80. We're trading right now at that area again, down about 0.2%. As this market, we're pushing 22,000 in the NASDAQ 100. Man, watch out. Yeah, Salesforce up a percentage point. Apple pushing all-time highs, approaching $4 trillion company right now. Meta shares slightly in the red. Yeah, Google slightly in the red as well. All right. Let's check back to some of the other headlines that we had pulled up here. Talking about Broadcom. We talked about the Fed. And this is where, bigger picture. And unfortunately, this gets political. But it's like it's played out before, folks. We did this in 2016. If you believe in tax cuts and you don't care about the deficit, make that argument. That's great. But unfortunately, and both sides do it, but Republicans are in charge right now, man, and they're saying that we can just tax cut our way to growth, and that's not how it works, man. Okay? Tax cuts may fail to drive much, if any, economic boost. So you're talking about extreme tax cuts for corporations because it's the wealthiest are wealthy. And folks, with somebody with a son with 3 years old, I do worry about the deficit. I think everybody does. And you're talking about cuts that could cost $5 trillion, few offset plans, and very little proof of any restraint in terms of what is going to be added in terms of economic growth and where all those numbers are going to be made up from, right? We all know how these numbers play out in terms of the deficits going forward. And everybody wants less taxes. Everybody wants unlimited free recess, folks. They want free cookies at lunchtime. They want all of it. That's not exactly how it works, right? So we'll see how this plays out. But you're going to see the conversation. Republicans are going to say that they pay for themselves and that they're going to cause growth. We've done this in 2016. And if you believe that you don't need to balance it, make that case. But we're going to see it play out for sure. Yeah. So how about... I was going to say Elon. How about Bezos and it's got to be a tough one when you see, right? Elon becoming the richest person in the world. You get SpaceX with fantastical valuations at this point. But nonetheless, Bezos, he's going to meet up with Trump next week. He's donated $1 million to the inauguration fund. And he's going to need the new administration's help in the space race against Elon Musk. Man, if all had gone to plan, Amazon's Challenger would be serving beta customers by now, but that's not the case. And you're going to see this play out. I mean, you've heard Bezos talk about that this company could be more valuable than Amazon in the long term. And of course he's going to say that at this point, right? What else is he going to say? He's moving on. He's no longer the CEO. And this is his new growth perspective, just like Elon in the same way, has different areas that he is looking towards. But nonetheless, you're going to see that one play out. Yeah. But he's behind the ball, and I'm sure that's going to be frustrating when he sees the type of rewards that Elon is getting. And how about insurance? Let's talk a little bit insurance, man. Homeowners insurance rate changes since 2023. Now, here's why this is deceiving. I want to talk about this. Since 2023, folks, Florida rates got jacked up huge in 2023, and I actually saw my insurance costs go down from 2023 to 2024 because they went up so much in 2023. So don't be misguided from thinking that we're not facing the same path. Maybe it's just not happening this year, okay? But we got higher prices across the board, and it's not going to stop, period. End of sentence. Insured losses from U.S. storms have grown 8% a year for more than a decade, right? And it's not fire, folks. All right. And look at how this comes in. Hail. Where'd that come from? Right? I guess that's a part of everything. Yeah. Home insurance in certain areas the past 2 years typically doubled the hail and wind deductible to 2% from 1%. It's up all over the place, man. Insured losses from hail. You got problems, man. We talk about flooding. We talk about, storms in Florida, right? But it's across the board. It's much bigger than those anecdotal stories of homes that are ripping across, Florida. We'll finish that conversation up. Markets, all-time highs in the NASDAQ 100. One more segment. Don't go away, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. NASDAQ 100 up by 1.1% right now. You got Bitcoin up another $1,000 at 101,480. You jump over BlackRock saying, hey, how about 1 to 2% weighting? Boy, could you imagine if everybody's got 2% Bitcoin in their entire portfolio, folks? Woo, watch out. It's a potential blueprint for investors. They're saying 1 to 2% is what you should have, would produce a similar share of profile risk as the so-called Magnificent 7 tech stocks in a standard 60-40 portfolio of stocks and bonds, okay? It's a reasonable range to devote to Bitcoin. Anything beyond 2% would sharply increase crypto share of overall portfolio risk. That's where they get that number from. But boy, you start talking about people putting 2% of their wealth across the board, okay? And you better watch out, man. There's only 21 million coins. And if you put 2% of wealth across the board, that number goes up for sure. Now, where it gets interesting is, why is it got to be in Bitcoin, though? Okay, this is what they use. They use Bitcoin. But why is it got to be in Bitcoin? I love that part of the conversation, right? Why can't there be a more technologically advanced coin? Why can't maybe it be Doge? Maybe it's going to be Ethereum, right? Probably not, but that is one of those risks that when you put yourself in to a crypto coin like that. And we'll finish it on a good note. How about Dick Van Dyke, man? 99 years old. Yeah, Dick Van Dyke, 99 today, man. He's still kicking. And yeah, he was just in a music video for Coldplay, All My Love. And what's he talk about? He talks about basically keeping going. Yeah, I'm trying to get the quote here. Yeah, and this is, I get to do what I do, play and act silly. And, you know, as they talk about, many super agers, they're always doing something. You never retire, folks. Keep going, right? You have purposeful jobs that fulfill them. And that's what he's talking about. He keeps getting to keep going, man. Yeah. Dick Van Dyke, 99. Good way to end it on December 13th, as we are 12 days out from Christmas, folks. Folks, thanks so much for kicking your Friday off right here at TFNN. Stay tuned. Basil Chapman's coming up next. And don't forget about Tiger Dollars, folks. We got a sale going on for the holidays through next week. Check that out on the front page of TFNN as we've doubled all the bonuses. And we'll see